So basically, we're, after tonight, we'll be halfway through. Next week, we'll be almost caught up with our high-day class. So that's how quickly this night class goes. I handed out some packets of problems that we're going to cover, not saying that we're going to cover all of them. They're templates to help us get through our problems quicker. So we'll use those as a guide through Chapter 9. Looking at the requirements for Chapter 9, there is an additional one. And that revolves around the TSA project, which is our, now instead of 25-point, it's 50-point problem. So I have assigned you to a group partner, and the requirement is that we will have you do this TSA problem using Excel, as well as doing it in CNOW. And the reason you got two packets, almost pulled the cord out. The reason you got two packets is one has the problem 973 on it. This 973 problem is very similar to the project problem. And also, since it's so similar, this is kind of the layout that I would like you to use for your Excel worksheets. So this problem 73 that we'll get through. I'm not say we're going to get through all of it tonight, but we'll get through quite a bit of it tonight. So we'll talk about that requirement as we go through Chapter 9. With the reason you're assigned a group partner is that the state wants to know if you are able to work with a partner or in a group. So this is our way of assessing as to whether you can work in a group. And I just noticed that these are not available. So I'm going to make these two links available in Blackboard. As soon as I can find it. It just says it's available. Is anybody in Blackboard now? Do you see these links? I thought they were kind of grayed out. Workbook?
That's Excel workbook.
Is that there? It should be, I hope. It's under the link for the TSA 966 link. Do you see it? Caleb? No? Okay.
You said it's supposed to be under CNOW project program, right?
Yeah.
It's not in there yet.
Oh, here, this one is wrong.
I saw assignment project, but the link not open.
It should be there now.
We have to refresh it.
Probably. So, I will assign a group partner to you. Let me give you this rubric. Amber, you went with Lisa? She's our online person. So you'll be communicating via emails.
Okay, that's
Sean,
no, that project.
it's not yours.
That is like homework, but they have the
Kayla?
Excel. The one you want me to do is Excel.
And Jill,
That's not in here yet.
you're group 4.
This one, yeah, Excel.
Is there?
You're actually a group of 3. So because you're a group of 3, I'm going to give you one little more
Why I don't
extra
see? Where?
worksheet to do.
Right after the.
Yes.
Aaron and Joe,
Right after.
Joe's over there in the blue.
Yeah, this one.
Okay. So
55. Group project peer review form.
Mine's in there.
Melissa, Tiffany's your partner. She's not feeling well today. And Julian Pauchery
Okay.
are together.
Thanks.
Okay. Now, as we go through the problems, I'll address the points. Now, there's not a lot of points on the project itself, the Excel part of it. Somewhat that's intentional. But the main reason for us to do the Excel project is to give you a little more practice using Excel to create budget reports. And again, it's something that our advisory committee recommends that you get as much Excel exposure as you can. So we implemented that in this course as well. Just very similar to what we did in cost accounting, with that course having the Excel project in there as well.
Peer review.
So we'll cover that shortly. In addition to that rubric, there is an evaluation, a peer review. Since you're working in groups, this is again our way of assessing how well you worked in that group. Now, as far as group work,
I don't see like
the worksheets mainly are
that.
done.
Make it
Mainly are done individually, and then maybe at some point you communicate, hey, I'm stuck here with your partner, or hey, can you look at mine and see what you think, that kind of group work. That's all I'm asking. I'm not asking you to physically meet together. That's certainly not possible with your work schedules and so forth for many of you. So do your best. The only issue I run across is that sometimes when students send out an email to their partner, they never get a response. So be polite if you can. I know you're all busy, but try to respond and say, hey, I haven't had even a chance to look at it. Give me such and such time. So just be curious, try to understand the other partner in their shoes. So there's only 3 points on the peer review section of it. And I would like you to also evaluate your performance yourself. You know, judge yourself. How did you contribute? How well did you communicate with your partner? Those kind of requirements. So not only do your partner, but also do yourself. For the group of 3, Sean is your other partner. He's not here. He also is not doing well today. So I'm going to give this to Joe if you want. Basically, you'll have 2 cash budget reports to do, which means basically you'll copy the old one to create the second one and make these modifications. I've got check figures there also for you so that you have something to compare to, because you won't be inputting this into C now. I will also a reference for you to kind of go through these. So if there are questions on it, let me know. Obviously, because it's a longer chapter, we are looking at a 2-week schedule for these, so that should help us in our efforts, hopefully. These assignments are not due to the 15th, which is 2 weeks from today, basically. And that's why we implemented the Excel part in this particular time frame. So keep that in mind. And then we'll go back on our 1 week per chapter after that to complete the course. The exam is scheduled for the 16th. Obviously, has the extra day help. Is that working all right for everyone? So now that will also be the 17th instead of the 16th. So we'll see how that goes. And I can open it up earlier for those that wish to take the exam before that 16 time frame at this point. So we'll see how things go. And we'll discuss that more next week. All right, for Chapter 9 then, it's about the budget. In many instances, many companies don't do a budget. Why do you think small businesses don't do a budget? I pick on small businesses, but even big ones don't either. Takes too much time. And think of a small business too, it also is changing every day. So what we knew on Monday is different than Tuesday. So it's really hard to predict when you know for certain how each day is going to turn out. So predictability in many companies is very difficult. So that's another problem with budgets. But my role here is basically to convince everyone that budgets are super important. And they do a couple things. They're a great communication tool. What is the expectation for sales? What is the expectation for our costs? How much our costs should be? What is the goal, right? Setting goals is great use of budgets. So those things are imperative in helping our business do better at what we do, right? And the author talks about this process and the ability to use the budgets to help us to control our operation. And we use the ability to compare our budget to actual numbers. And that's the goal with this budget process, is to compare that budget to our actual numbers and see where we did well, see where we did not so well, right? And obviously, those areas that we need to improve on, what are we going to do to get on the right track? And most of these budgets are done for a whole year, right? And they are broken down into months then, or maybe even segments of our operation by month. So that's the goal here when we're looking at our budgets. So the author then goes into a series of types of budgets, types of planning. They talk about a strategic plan, which covers 5 years. So these are some of those definition things that I would like you to know for the multiple choice questions on the test. So here, this is on page 456. This strategic plan is more of a long-term plan, and it's got the word strategy in it. So obviously it's a long-term goal, and basically it outlines how do we compete. How do we compete against our competitors? Are we low cost? Are we better at delivery? Are we better at service? Are we better at quality of product? What is our main focus in our operation? How do we compete? When I was working with the company I was working at, speed was our big strategy. We could make that product do it quicker than anybody else could. So you'll see some of those in many advertisements, like for Walmart, we're the low-cost provider or whatever the case may be. Same thing. That's the strategy. So the strategic process obviously is broken down, right? We start here way at the top. We then come down our list here setting long-term, more than 1 year, short-term, 1 year plans and budgets for each of those areas of our operation. And then we exercise those plans, do the activities that we want to in our operation, and compare it to our budgets. You see the word comparison in here. And that provides the feedback then to hopefully do a better plan next year, or the next 2 years, or whatever the case may be. That feedback is where the control comes in. You cannot tell a person you're over budget on something, right? You didn't meet the sales expectations if they don't know what the plan was originally. So that's again why a budget is so important, is to exercise that control. All right. So, just general stuff on page 457. The advantages of budgeting. Nothing too earth-shattering. We've discussed these already. And then they talk about the master budget. And that's what we're going to do in Chapter 9. It's typically a 1-year time frame. There are different types of master budgets. They talk about a different type here called a continuous budget. It's a moving 12 months budget cycle. So as 1 month drops out, a new month is budgeted for. So this is very difficult to maintain, and you really have to have the resources to do it. So just know what that is. It's a master budget that continues month after month. It's always a 12-month look. Next, who's on the budget committee? And it looks, I like this. This is probably pretty accurate. For most companies, it takes about 4 to 5 months to develop a budget plan. So that's, again, that time commitment that's so difficult. And also, their purpose, this is what the budget committee does, reviews, resolves differences that arise in the budget as it's prepared, and monitors, right, the actual performance throughout the year. The main person, the lead person, I should say, is the controller. Who is the controller of a company?
The chief accounting?
The chief accounting person, yeah. Hopefully that'll be you in many cases. They're the lead accountant, right. Controller means they're controlling the operation, they're controlling the assets, protecting the assets, and doing all those reporting functions within the company. Financial statements, tax returns, and so forth. So they're typically the lead on these budgets. And then the budget cycle, or master budget, is broken down into operating and financial budgets. Tonight we'll cover almost all of the operating ones, if not all of them, starting with sales. Sales is the first operating budget that has to be done. Based on the sales budget, that drives production, that drives purchasing, that drives labor, that drives overhead, it drives everything. So the most important budget that we can make is that sales budget. Once we're through all those, then we look at financial budgets, specifically cash. Key important ingredient. If I don't have the cash, or I don't have the timing of the cash correct, we run out of money, right? So that's paramount when we're looking at our budgets for the upcoming year. So here it is in a nutshell. Now this is not, what is it? Yes, it is, page 458. basically this top section is operating. The bottom section here is financial. Just know which one is in which group. Operating and financial budget. All of these are our master budget, but basically that's just a split. So let's start with the sales. This is number one on our list. As you can see, it's the top one. So we're going to do this one first and work our way down through the reports. Very simple process. What's on the report is basically sale numbers and sale prices, right? In units and in price. So this example is on page 460, exercise 1. So these are some of the requirements I would like for your project. First off, it has to have a heading with the title of the budget report and for what period of time. Now the example in the book is by quarter. You're going to be doing it for 3 months, January, February, March, for the first quarter for your project. Also be aware that I would like dollar signs on dollar numbers when appropriate and underlines for the subtotals and double underlines to end the report. So those are some of the things that I'm going to look for in them 7 points. Is that, do you have that for each of your worksheets or budgets themselves?
So we have 10 worksheets, right?
All right, Sean. Okay, just then follow along and just I hear the beep when you send me a chat, so just do that for the class. I'm assuming he's okay with that. All right, so let's try one of these. I'm not going to use the 50. I'm going to jump right into problem 73. Sean, do you have this packet? Probably don't. I'm going to email it to you quick. Okay, they're being sent. You should have them. The one I'm looking for is the problem 73. So if we can jump to our book, page 513. Letter B has the information for our sale numbers. So I'm just going to quickly throw them in. And also letter B has the selling price per unit, which is $400. Numbers get kind of big, but hopefully they're not too terrible for us. So I'm going to write down the units now. 65, 75 is 140, so 300,000 total. Was my math wrong?
You can.
I'm good? I'm going to multiply each of these by 400. If you want, as you're going along with your paperwork here, if you can have Excel open. The problem that's scheduled for us to do is problem 66 in the book. That's the TSA problem. If you wanted to create these worksheets as we're going through them, you certainly may. It's slightly different because of instead of quarter, you'll have January, February, March, and then instead of the year, you'll have a quarter total at the end. So the project is by month with a quarter total at the end. I've also developed, I should say, the numbers that you use in your Excel workbook should be the ones you can just directly enter into CNOW. So once Excel does the math for you, you can just plug those numbers right into CNOW. So as we're going through, like I said, Optima had 65,000 for the first quarter, times 400, 26 million. Now I'm not going to add the dollar sign going forward because the numbers are too big. 28 million. Thank you. And then 36. 120, thank you. Excellent. That's it. As a reminder, I'm going to follow ledger rules. So I like these numbers to align, right? And subtotals should have a dollar sign if it is a dollar amount on them. Double underline, single underline above. Tells me it's a subtotal, right? So watch. I want these to look pretty. Right? I do. Because that's a reflection on us. If there's typo errors, if there's numbers that are, some are formatted, some are not, it doesn't look good to us. So it's imperative that these are done very nicely. I would like this, I know it's a small schedule, but put it on its own worksheet. Okay? One worksheet for each of these schedules, please. Okay, that's our first budget. Pretty simple. The difficulty is how do we get the numbers? Where does the 65, the 70, the 75, and the 90 come from? Who in the organization would give you those numbers? Not production. Who would you go to?
The operations or?
No, we're not there yet. Who's always in the fun group of a company?
Executives?
I would like that to be, wouldn't it? Marketing. They're the fun group, right?
Yeah.
We're the boring accountants. Yeah, it's marketing. They're the ones that give us those numbers. Okay, what do we know about marketing people in general? I'm making a generality here. Are they usually optimistic or pessimistic? Yes, you have to be. Oh my gosh, you have to be. Otherwise you wouldn't sell anything, right? So these numbers we have to be careful, right? Because they're always usually higher than they think or possible, right? So our job is to maybe look not only at their information, but what else? History, right? history is a big factor in our determination of where these numbers will be. I get from one client, yeah, our sales are going up 10%. What did you use for that reasoning? I just got a feeling. Oh my gosh. Okay, and the reason this is so critical is that what? The remaining 9 budgets are based on that number. So that's why it's so important that these are right. Okay? You don't want to show a banker, sorry Joe, you don't want to show a banker this budget and then you don't hit it. That's not cool. You promised, right? The loan was based on these numbers. We agreed that that's what you're going to hit. And if you don't, it's very detrimental to your loan. So this is nothing to play with. Let's put this number somewhere else. Where does this 120 go?
The total sale.
It's for the year. What statement does it go on?
Oh, the
Income statement. Yep. So in your packet, toward the end, there should be an income statement. Here it is. Oh, not quite there. It's after your finished goods. What is the projected sales number? $120. And this number also goes into our cash budget already, right?
Yeah.
So let's go to the last page. Into the financial section of our budget.
Can we see?
Cash budget. Should be the last page. I hope it is. For problem 73. Has number 250 on it.
Yep.
Okay. Now, we have 2 questions or 2 sections here for our sales. All our sales are on credit. We're assuming that. So I need to find some information on how quickly we collect those. And that information is found oh, letter B. Okay. What percentage is collected within the quarter?
The number B, right?
Yep, in B, letter B.
The 15% collect at the following quarter.
Is it 85 in the quarter? 15 in the next quarter? Is that how it is? And we're assuming no bad debts. Again, in a budget, would that be realistic? Probably not. So you would certainly want some type of bad debt percentage here. But we're assuming it's 100%. We're going to sell everything. We're going to collect all the money. So in the current quarter, I'm going to take, I forgot my number. What was my number in the first quarter? 65?
Yes.
26 million.
26 million. So take 85% of 26 million. $22,100,000. But you notice that the report is in thousands, so I can put in 22,100. I'm just dropping the 3 zeros. The rest of it goes into the next quarter. $3,000,009. Make sense? So if I collect 85% in the quarter, 15 in the next. The next quarter was 28 times 0.85 gives me 23,800. Which gives me 4,200. So I'm just kind of just filling in off the schedule here as I'm going through it. And then third quarter was 30 million times 0.85, 25.5. 44,000,005 in the next. And then we end up 36 million. 30,600. And accounts receivable then at the end of the year will be the remaining, which is 5,400,000. Again, I'm dropping the 3 zeros. I just ran out of room. So, question is, where do I get that starting number? If I could have you turn your page to page 514, I want you to look at the balance sheet.
The accounts receivable?
Yes, what is it, Joe?
3.3 million.
3.3. Why didn't I take 15% of 3.3? Why did you give me the whole number?
Because it should be the balance left over? what
Yeah,
you said?
exactly.
Okay.
The balance left over. I was just trying to make sure you knew why.
Gotcha,
Yep.
sure, yeah.
Good job, excellent.
Okay.
Thank you. Super. 3.3 million is what we collect in this first quarter. Obviously, we can add them up. Did anybody do that already? Save it, don't do it. We can do that later. So I just wanted to show you the flow, right? How they collect their money. All right, let's save what I got. Let's stop there. Let's go back to where we were. On your other page or packet is problem 50. Because the sales budget is so simplistic, I'm actually not going to do it, but I will post the notes for my day class. I did do it today because we have a little more time. But I'll post that information in if you care to look at it. So I'm not going to do problem 50. I'm just going to mention that the notes will be there after class. We have tougher schedules to do than the sales budget one. All right, after Schedule 1, what's next? Schedule 2, obviously. This discussion begins on page 461. So once I have the sales budget set, Schedule 2 is our production budget. Again, it's not too bad of a report to create, but what we bring in now is the possibility of beginning and ending finished goods. So that's what makes it more complex. And they have basic computation How do we compute the units to be produced? Well, we take our expected sales, we add our desired ending inventory level, we subtract our beginning, and that's what we need to make this quarter. You've done this already in some form or fashion. In most cases, it's not what to be produced, but what is left in ending work or ending finished goods, or to compute how many units were sold. You basically have done this in other classes, the same formula. So this formula that we see here is now going to be in a budget report. Example 2 is the example. They're making t-shirts. And I want to show one thing here. The desired ending inventory level is a percentage of something, okay? You will be given the percentage. But be careful, there's more than one in a problem. Make sure the percentage for the production budget is for inventory in the finished goods inventory. What's the other inventory other than WIP that we could possibly have? So we have WIP inventory, we have finished goods inventory. What's the third one? Materials inventory, which is what we're going to next after Schedule 2. It's Schedule 3. It's going to be the materials inventory. So in your problems, you will see a percentage for both. For the second budget, make sure you're using the finished goods. And then once we have those levels, right, we add them to our sale units. We subtract our beginning to get our production units. So here's that example. This example is on page 462. What do we start with? Sale units. If you're in Excel, what do I do to get my sale units in automatically? Cell reference. I'm just making it up. So you're going to cell reference equal sale worksheet cell C1. Bring that number in automatically, right? And you'll notice that these ending values are a percent of next month's, or next quarter in this case, production needs. What was the percent again?
The finished good from
That's a 2, means 20, thank you. That's my sign language. I failed miserably. 20%, right? So I want your Excel to be a formula, right?
Yeah.
Taking that percent times next month's, right, quarter here of their sales to get the desired ending inventory. Doesn't that make sense? What if the company has a spike in sales, right? I want to have a good quantity level that I think I need in order to meet that sales demand. I never want to be short if I have a product that's selling, right? That's always a bad thing to get that customer back. So that's why we need to make sure that percentage is adequate. Obviously, I had my first subtotal, so I need it underlined. I'm adding these two together to get 1240. I get then and subtract the beginning inventory to get me my units produced. Now on the test, you can use Excel if you wish to, right? Or I also, if you come to class, I'll have a template that you can fill these in if you wish to. But I've had students do this on the test. Ugh, that's Schedule 2. Guess what? Schedule 3 is wrong. Schedule 4 is wrong. Schedule 5 is wrong. Schedule 6 is wrong. 7, 8, 9, 10. So it's very important that we have these in the right direction. Okay? So I'm going to erase that because, oops, I don't want to do that either. Oh, shoot, I didn't want to do that either. And there should be a double underline, right? One of the quiz questions or test questions will be, what's on this Schedule 2 report? What is on the production report? Is there anything about sale dollars?
Not yet.
Sales per unit? Nope. Is there anything about purchase dollars? Nope. There's no dollar signs on here at all, right? So when you're formatting these numbers, I shouldn't see any dollar signs here, but I do on occasion when I get students' projects. It happens, right? I see a number, I gotta put a dollar sign on it. So just kind of watch for that, please. Next thing I would like you to be aware of on this report, this number and this number in the total column. Where is the 200 coming from?
Quarter 4.
Quarter 4. Where's the 180 coming from?
First quarter.
First quarter. So again, in your Excel, it should be what? Cell reference in. Cell reference in. Now, this subtotal, I would like that to be the addition of these two numbers. Makes sense, right? I don't want an auto sum of these. If I added those together, it would not equal the 5,900. You cannot do that because of the inventory levels are influencing the numbers. Does that make sense? So watch the formulas. Now, if I add these four up,
It's gonna equal.
it will equal. But what would you like to do? I would like you to see this being this number minus the 180, right? You can double check your work. That way you know both vertically and horizontally it comes out. Is that okay? Clear? Okay. All right, let's try our problem 73 then, please. So in real life, if you're doing your schedules, you would cell reference these in, right? What am I starting with? Sales. So 65,000. I'm going to start here so I can see my numbers. 70, 75, 90, 300,000. Look at letter C.
C.
Letter C. Please add those numbers in.
They just give me.
They're the ending finished goods, right? So I'm going to put that on here just so that we must be looking at the finished goods data, basically, when we're doing Schedule 2. Finished goods data, finished goods ending inventory. I'm going to see how Sean's doing here. Sean, are you okay? Maybe you fell asleep already. That's not a good sign. Sorry, guys. Is it that?
No, it's fine.
It's all right? I'll come back to you later, Sean. I hope you're okay.
Maybe he's like,
Okay, let's throw them in, 13, 15, 20, and 10. Oh, 30, of course. And what's for the year? 10. Right, end of the fourth quarter is the same as the end of the year. Very good. I'm still sharing. Oh, okay. I lied, I'm not sharing. Let's try it again. Isn't technology nice or fun? Can you see now? All right, keep me posted. Thank you. 78,000. We're on schedule 2, by the way, Sean. Guys, help me if I mess this up. In letter C, what did it say about the beginning inventory?
You say they don't have.
Right? It's 0. They're making it easy on us. But we'll do other problems where it's not so easy. 78,000. And here, the ending becomes the beginning. And for the year, the amount, that comes over here for the total, right? The beginning of the year is January, right? Well, that's the same as the first quarter. It's the beginning of the first quarter as well. So we want that number to be the same. Use this as a guide. What do? I subtract. I'm now down to 72,000. I'm down to 80,000. I'm down to 80,000. And for the year, 310,000 are the units I need to produce. Okay? Now, again, this is a great motivational tool for your production department. If in the first quarter I was budgeted to make 78 and I made 80, rock on, right? If I made 70 and I was budgeted for 78, boy, what happened, right? Wouldn't this be a good discussion to have at the first quarter rather than at the end of the year and now you're short? Right? What influences our cost per unit more than anything? That bottom number, which is units produced. So if I'm not hitting the units produced, guess what? My cost per unit is going up. Then do we want that? What does that mean? We're going to lose money, possibly, or not make as much, right? That's it. That's the production report. Does that lead to anything else? Any questions on this? Now, I do want to mention one thing here. In the example in the book, right?
The U% of the next.
They were using a percent, right? So some problems we give you the ending value. Other problems you're going to have to figure it out. Let's look at our project problem, please. Problem 66. Page 509. Letter A, please. What does it say that the percentage needs to be?
80%.
So that's your formula then to get that ending number, because 80% of next month's sale has to be in there for the desired ending. So on your project, we give you the percentage. All right, so I'm going to just erase that so nobody thinks that's part of this problem. I want to take a quick look at 51, please. Um, 50 and 51 obviously go together. I'm only going to look at S12, L7. 800 were the sales values in the first quarter. And I'm just grabbing these from the book. 2200. $5,600. 4,600. And then they have the first quarter of the next year, 900. First quarter of the next year. And that's important to know because your project problem is also going to give you more months. In fact, it gives you April and May sale numbers. So let's see why that's important, that final number. The desired ending is what percent for this particular SL7? 20%. Excellent. So I'm going to put these in blue. 20%, 20%, 20%. And I'm going to need, right, 20% of the first quarter next period sales to get the last one for the quarter of period 4. So 20% of 2,200 is 440. 5,600 is 1120.
Yeah.
Yeah, thank you, Kayla. And 20% of 4,600 is 920.
Yeah.
And 20% of 900 is 180. And we want to what? Add those, right? Not subtract. Might as well fill it out. It's really not too bad to fill out quickly here. Amber, what number goes here for the year ending inventory?
The 180.
Very good. Excellent. Now, on this problem, what's the beginning? Was 340, correct? First quarter was 340. $340 is given to us. Does everybody see that? 340?
No, I see 170. The beginning inventory? What was
The
170?
L5 is 170, Pashari.
Oh,
340 is the L7. That's what we're doing. So there's two parts on here.
oh,
We're doing the 7. L5 has got the lower number.
okay.
All right.
So,
On the test,
okay.
I'm not going to give you the beginning inventory number. And I have students come up to me, hey, you didn't give me the beginning inventory number. I said, I don't have to. Think about last year. fourth quarter last year, how would you determine the beginning inventory? The percentage is 20. 20% of what?
This
First
one.
quarter sales?
First quarter sales, just like I did here, right? To get the ending numbers, right?
Mhm.
So 20% of 800 is what? 160. That's what goes there. So it depends on the problem. Sometimes I give it to you, sometimes you gotta figure it out. So your question is, why did the author pick 340? I have no idea. It should be what? 160, right? But maybe they didn't sell as much as they thought last year in the fourth quarter. And they have 180 more units. Okay? And the rest is similar. Grab, right? Grab, grab. What number goes here for the year?
340.
Awesome. Right? What I started with in the first quarter has got to be what I end in for the year, for the beginning of the year as well. Same thing, 340. And this is what makes Excel kind of nice. If you can get somewhat of a schedule together that you'll be able to just plop numbers in, it'll add and subtract automatically for you.
So why is it 340 again?
Joe, I have no reason to know why it's 340.
Okay.
The author just gave it to us.
Okay.
Just when you're doing your exercises and problems, sometimes you will be given that number. The
Okay.
beginning inventory was 340,
Okay.
or sometimes I'm not going to give it to you, then your only other choice is to figure it out, right?
Gotcha.
Using the percentage.
Okay. So you wouldn't add up the other quarters then to get where it's always, the year one will always be the first quarter beginning?
Correct.
Okay.
Yep, that is always the case. There's
Okay.
never a deviation for that. Just like the ending in the fourth quarter is the ending for the year.
Gotcha.
Yep.
Okay.
That will always be the case.
Okay.
Now, your project is 3 months and a quarter,
Mhm.
right? The end of the month, March, is the end of the year,
Gotcha.
as well as January is
Okay.
beginning of the quarter.
Mhm.
Yep. All right, let's take our first break here. I'll see how Sean's doing. And we'll start with budget number 3, the materials purchases budget. This next budget is our purchases budget. So this is the first $ purchase amount, right? Which then leads to, again, going into our cash budget. How much are we going to spend and how quickly are we going to spend those purchase dollar amounts? Remember, a lot of small companies struggle with cash flow. It's one that I watched practically every day to make sure that we had enough money to meet payroll was the key one. And then the IRS, the payroll taxes and so forth. That was number 2. So on the material purchases budget, which begins on page 462, we're going to use those production numbers that we got from 2 to develop this, again, purchase schedule. But now the inventory that we're looking at is the materials, direct materials or raw materials inventory percentages. So you will be given, again, a percentage desired for ending inventory on this schedule as well. It's laid out very similar to Schedule 2. The example is exercise 3, which is on page 463. And the desired ending inventory levels for the t-shirts is 10%. 10% in this particular case. So you'll see that. Let's just, can you see this schedule at all, guys? If not, it's on page 463. Units to be produced come from Schedule 2. We do have an additional computation here, is that we use so many pounds, ounces, units to make 1. So we got to multiply that out. Take our units produced times some unit of measure. It takes 1 shirt to make a t-shirt, right? So that's why the number 1 is there. But you'll notice again the same procedure is done. And then, like we did on the Schedule 2, the ending becomes the beginning of the next quarter in this case. So finally, we end up with the report where we multiply by a cost level. In this case, $3 for a t-shirt. Melissa?
This might be a dumb question, but where it says ending inventory and you do it percent, would you increase or decrease that, like have them different? Like say one quarter have 10% and then like the next quarter have 20?
If you felt that in between quarters there was a big fluctuation in sales, then you would.
Christmas time?
Christmas time for those people that have those kind of situations, certainly. Yep. I would not doubt it at all. Yep. And that lends again to the complexity, does it not? How do I judge that, right? So that is not easy. But very good question, yes. And the final number then, not only important for purchase information, but also used in our cash budget report. These final numbers here. How much are we spending on the distribution side of things? All right, let's try our problem 73. See how this goes. I'm going to need some help here, though. Because I need the production numbers from Schedule 2. I don't want to be going back and forth, back and forth. For 73, the information on the direct materials is letter E. So take a moment, read letter E. It's on page 514. Page 514 of our book. What numbers in letter E can I put on my report?
$65,700.
Yeah, where does that go, Melissa?
Beginning inventory.
Yeah, down here. And what does it also say, Melissa, about those units?
A little N.
The same way? So I can put that. I don't know if that's right or not, but that's the production, or that's the schedule I think will happen. What else do they give us? What percentage do we need?
30% for the next 30%.
Yeah. right? Next quarter's, I know it says sales, but I'm gonna deviate here. So if you're doing this problem at home, we are deviating. They use 30% of next quarter sales. Nowhere else in the whole entire book or exercises or test will you ever do that. So I'm going to be consistent and base it upon next quarter's production needs. Is that okay? So in the book it says sales. We're not going to do it that way. And the only reason I'm saying that is if you do enter these answers into C now, they're going to be marked wrong because we're doing it differently. I'm preparing you for the exam. That's my goal here. That's what we're doing. All right. Can someone give me Schedule 2 numbers, the bottom row?
78,000,
Thank you, Kayla.
72,
Good.
and then 80 for both.
And what's the total? 310, right?
Yep.
Can I tell you what one student did on the test? Guess what numbers they used instead of these 78, 72, 80, 80? They used the sale numbers 65, 70, 75, 90. Ugh. And look how many spaces are on a production purchases. It was not good. Okay. I actually had to have her redo it just to be sure that she understood it. So be careful. Again, what's it say? Production units, right? Not sale units. What is using sale units is Schedule 2, right? That's where we use the sale units to start. Here we're using production units from Schedule 2 to get our answers. How much in pounds or units do I need to make one?
Use one updated material. The one unit updated material.
It's not one. Letter D. What does letter D say?
They said 5.
Three.
Updated.
3.
And 3 unit updated material.
3. 5 is for labor. We'll get there shortly. I had a panic attack. I lost my calculator. So 78 times 3 is 234,000. 216. 240. 240. 930. Now we'll take 30% of each number to get our desired. It is 30, right? Yeah. Okay. 30 of 216 is 64,800. $72. 72. And we can add the beginning, right? So if I'm ending with 64.8 becomes the beginning 64.8 and 72 and 72. Just kind of laying it out. And then we quickly do the same thing as we did in Schedule 2. We add the desired ending to our purchase needs now. Purchase we're talking about. 234,000 plus 64,800 gives me 298,800. I subtract the 65.7 gives me 233,100. And what is the cost for each, whatever this is, pound or whatever? $80? You're killing me. Why not 8? Why 80? $80 gives me 18,648,000. Keep going, guys. I need these numbers to do my cash budget, so we are forced to complete it. So keep going. Do it on your own if you wish to. Your calculator will be overheating by the end of class. Just verify my numbers are good here, guys. What am I doing? Joe, what's this number here? In my total column for the end of the year? For the ending inventory?
Would it be 65,700?
Yep. Yep. I'm just going to grab the end of the fourth, right? Bring it over to the end of the year. Since you're on a roll, what would be the first quarter? Or I give
You
it
already
to
know.
Forget it. I killed that one. Right? We're grabbing it from here, though. So obviously, we would end with the 930 number that we have over here toward the end. Because I'm adding the same number that I'm subtracting. And we'll multiply that by $80.
So why is the desired ending the same as the beginning? Just because you never want to have more than...
Remember, this is a budget. This is a budget, so that's what they're looking for.
Okay.
That's what they feel they need in inventory at both ends of the year. That is purely their decision.
Okay.
Other companies, it may be different.
Gotcha. Okay.
Okay. It also depends on what they expect sales to be in the next quarter, right?
Mhm.
That will influence their decisions as well. It's hard for companies to do a year, let alone 5 quarters, right?
Mhm.
So, not an easy task.
I asked the same question, but I forgot it was a budget. That's
Mhm.
why.
Yeah, it's a budget number. All right. How we do, okay? Those first 3 are going to be on the test. So those are the big ones that we got to make sure we understand. And with the inventory levels, Those are the stumbling blocks that we have to encounter. Some of the future ones, labor budget, overhead budget, pretty straightforward again, similar to the sales budget, because we don't have to deal with inventory levels. But let's get these numbers where they need to go on our cash budget. So we'll need these numbers. Oh, Melissa, did I do a mistake?
Well, so the desired ending inventory for that whole year, do you have to add the 930,000 to the 65,700?
Yes. So if I did that, the only reason I didn't do that, Melissa, is I end up with the same number.
Okay.
So yes, this number here should be 995, 700, which I then subtract, right? And I end up the same 930 number.
So those numbers won't always cancel each other out. This depends on what company and what their forecasts are. Or
Correct.
whatnot. Okay.
Yes, yes.
Okay.
This is purely hypothetical.
Gotcha.
Yep.
Okay.
Mhm. I'd like you now to look at letter F. And then go to your cash budget, letter F, and then your cash budget. How quickly do we pay our bills?
I think
What's the percentage?
50%. 50%.
Yeah, 50% in the quarter, 50% in the next, right? So our total purchases in the first quarter were how much? 18,648,000. Half of that is 9,324,000. I hope that's right. 18,648,000. Half is 9,324,000 in the quarter, half in the next. 50-50. Now again, that's just a company decision, right? Some pay quicker, some pay slower. One company pays between almost 60 to 90 days. That's their requirement. You gotta wait 90 days for your money, which for small companies is a killer. Okay? What was the next number for quarter two?
17,856,000.
8928.
Yeah.
I'm ready to get the next amount. Oh, okay, that's all right. Kayla? Our third quarter purchases,
Well, it'll be next.
19,200,000, right?
Yes.
9,600? I'll go with green. And the half of the next quarter is?
$93.48.
93.48?
Yes.
Which means in our accounts payable at the end of the year, we'll have 93.48, 9,348,000 in accounts payable on our balance sheet. So we'll use those numbers probably next week. What was our beginning AP number here? Letter K.
7,248.
Yeah. Which represents the 50% that we didn't pay last quarter, right? Fourth quarter of last year. There we go. This is my Christmas slide, by the way. I know it's not Christmas. It's very colorful. Again, very pretty. I need you to find another schedule for me, guys. In your packet. It's Schedule 7. Schedule 7. Back to 73. It's kind of in the middle of it. It's called the finished goods inventory budget. It's very small, but not always the easiest to fill in. What did we just finish? We just finished this materials, right? What did we need for number of material units to make one unit? It was 3, right? So I'd like to add the number 3. And what was the amount per 3? Dollar amount? 80. So $80 times 3 gives me a cost per unit of $240. Now this schedule is strictly to do that, is to come up with our production cost. This is our product cost. What 3 items are in our product cost per unit? Yep. 1, 2, 3. Just like we learned in cost. Yep. So we're going to be filling this in to get our cost per unit. And that's what you'll do on your project as well. Our next schedule then is labor. And labor schedule begins on page 464. It's really simplistic. It's almost like our sales budget. Let me go back here a little bit. Like our Schedule 3, Schedule 4 begins with production units, not sale units. So we're going to use Schedule 2's numbers to start off. And really, no inventories to worry about. We just need to know how long does it take to make one. In this case, 12 minutes. No. What's 0.12 times 60? 7.2 minutes. Thank you. So 7.2 minutes to make one unit. And then remember that this is our direct labor force averaging $10 per hour, right? We're not concerned about maintenance labor. We're not concerned about supervisor labor. We're not concerned about sanitation labor. Only those people doing what? Working on making the part. That's what we're looking at here. Those other labors are overhead. Remember that discussion on overhead? Ooh. Let's go to problem 73. Again, we're going to start out with production units 78, 72, 80, and 80. Letter then D of the problem tells us how long does it take to make one. Does everybody see the 5 in letter D? We have to give you that. There's no other way around it. You notice I don't put a dollar sign yet, right? These are hour units, not dollar units. What's the cost per hour?
10.
10 is the average again?
Mhm.
These numbers are a little bit easier to do. That's nice. $15,500,000 for the year. Again, pretty straightforward. With labor, we're assuming all labor cost is paid within the quarter. We're not delaying it. So 3.9 million will be the cash spent in the first quarter. 3.6 will be the cash spent in the second, and so forth. So let's use those numbers, 3.9, 3.6 in our cash budget. So again, on your Excel worksheets, this is all cell referenced, right? Back into our cash budget. You are required to do a cash budget for your project. Sorry, it's not straight. I grew as I went across. I wish. And then I also want to go to our finished goods schedule, finished goods schedule, schedule 7. Julie, you're all right? You're good? Okay. How many hours does it take to make one? 5, right? Cost per hour?
No.
10, thank you, Kayla. 50 for the per unit, right? 5 times 10 is 50. All right. The overhead budget basically is on page 465. What was the main cost driver in cost for overhead? In most cases, it was what? For machine hours? For our chapter 9, it's always going to be labor hours is the driver. So many hours to make was 5, right? So we're going to use that 5 times a predetermined overhead rate. Can you look at letter H? What does letter H say about overhead? What's the predetermined rate?
$6 per labor hour.
Yeah, 6 per labor hour. And that's what was shown here. So they're going to take the labor hours now is the starting point. We're going to multiply by the, in our case, $6 to get a variable overhead amount. And what do we know about fixed overhead? It's the same fixed amount no matter what the production level is, right? That's the definition of fixed overhead. So in letter H is the variable information for the project, for this problem. And letter G is the fixed information. So what does letter G say about fixed overhead?
Is quarter, so that's going to be 350 for each quarter.
350?
350 for each quarter.
So in your packet, there should be a schedule 5.
It's $350,000 for depreciation.
Oh,
Oh, wait a second. Fixed overhead total 1 million. Total 1 million is quarter. Total 1 million is quarter.
yeah, we'll take that into account. We need that 350 number as well. But let's put our fixed cost in at $1 million.
That you got it from letter G?
Letter G.
Okay.
Mhm. Yeah, they got it, in my mind, they got it backwards. Letter H is where the variable stuff is. Good question, Joe.
Yeah.
Melissa, can you give me the labor hours from Schedule 4?
Sorry, I'm cheating.
I'm sorry. I did that on purpose, you know that, right? Can someone help Melissa out? Aaron, go ahead.
390,000. 360,000. And 400,000.
How much?
Here is 15,500,000.
No, not 15 million. Can't, 1 million.
Oh, 1 point, yeah, okay. Yeah. Too many zeros.
Yep. That look good? I'm going to multiply these by what number? 6? Letter H says 6 per hour.
For the end of the year, for the budgeted, I have
Should be
1,550,000.
Thank you.
Thank you, Melissa. Like that. Not enough 5s, but too many zeros. Cool, thank you very much. 9.3 million. $13,300,000. I think that's right. Wow. And let's make that note that we have depreciation to worry about for our cash budget. It's 300,000, 350, right? Per quarter is for the depreciation. And that will influence our cash budget numbers, cash spent, right? So think of the journal entry. By the way, this is fixed overhead. What entry from cost, what would you be debiting, what would you be crediting? What's the journal entry for the 350? For the depreciation. I'll give you the credit, it's accumulated depreciation is the credit. What's the debit though is what I want you to do. It's production related, where does it go?
Oh,
Not the expense. Manufacturing overhead, which then goes where? Work in process. inventory, right? So those are the steps that it gets into: work in process, finished goods, right? And, thank you, cost of goods sold eventually, right? That's how we get our cost of goods sold number, from that entry. All right. So let's go to our cash budget. So if I take my 3,340,000 and I subtract 350, I get 2,990,000. Is that okay? So I'm going to go to my cash budget, first quarter.
I see. Yeah, we have to subtract.
Yeah, first number here. So I'm taking my overhead and I'm subtracting the non-cash, right? I'm taking my overhead number from schedule, what is it, 6? 5 or 6? And I'm subtracting that 350.
Say again. I thought you was
It was 3,340,000
in the fixed overhead.
in the total overhead, variable and fixed. And then I subtracted the 350 depreciation because it's non-cash. It doesn't affect our cash. Remember doing the cash flow statement, the indirect method? We would always take our net income and do what? Add the depreciation, because it's a non-cash. Same concept. Can someone else help me here? Aaron, you wanna?
Yeah, 2810. And 3050.
Twice?
Yep.
Do you have the year?
I don't, but I can.
Just so we get it somewhat filled out.
11.
11,900?
Yep.
Okay, we're moving along rather good, I think. Since this is a product cost, we gotta go to Schedule 7, finished goods inventory. Five is still the hours. Remember, we're basing the hourly, the applied based on direct labor hours. Letter H told us it was what? For the applied rate, letter H. 6. 5 times 6 is 30. All right, so what do we do for our fixed overhead? It's not per hour, is it? How much do we have total for fixed overhead for the year? 4 million, right? If I want a cost per unit, I gotta divide by units. Where can I find units? What schedule? Production units.
Sales budget?
Not sales. Production budget, schedule 2, right? How many units am I required to produce?
310,000.
Okay, let me look at it and make sure I grab the right number here. Melissa, I think you're right. The number I want you to grab, though, is not this red number, it's the blue. They're the same, just by coincidence, because I had 0 here. Production needs is what I'm looking for. So that's the number I would like you to use for your project as well. 310 is what I need to produce this period, irregardless of the beginning inventory. That's what I gotta make. All right, so let's throw 310 in there. And how does it come out? I hope it comes out all right.
I'm getting $12.90.
$12.90.
Yeah.
I'm just looking something here. I'm just wondering here. I think I told you wrong, guys. Shocking, isn't it? I think we gotta base it upon this ending number. These are my units produced, right? Wouldn't that make sense to use these numbers? It's just by chance they're the same. So let's use those. Yeah, that should be fine.
So the production needs and notes is also on.
I gotta research that. I'll do that over break. Let me figure that out. Let's go finish up the schedule, though. We can still do that. It's the same number. 1290 is correct. Joe gave us that. What was the total then for the entire part?
$832.90.
And then there's a separate question here. What is the dollar amount? It's really kind of hidden to the side. What is the dollar amount of finished goods? So I'm going to take the 332 that we just computed, and I'm going to multiply by the ending inventory. What schedule gives us the ending inventory for finished goods? Which is our finished goods schedule?
Production, or no.
Yeah, you're right, Joe. Schedule 2.
Okay.
The production budget, Schedule 2. What is the desired ending inventory? Or what is the level of ending inventory?
Desired earning is going to be
310.
10,000.
No, that's for the year.
Oh,
What's the ending? Joe?
10,000.
10,000. Very good. 10,000 units. Excellent. So you'll have a little small math computation here, multiplying those two numbers. $3,329,000. So that will finish that schedule then. And we're going to need this number here to compute our cost of goods sold in order to get our cost of goods sold number. So that's coming up in Schedule 8 here. I think we can actually see it. Do you see ending finished goods? There you go. So that goes for the ending finished goods. And in this particular case, the beginning was 0, right? We didn't have any finished goods in beginning inventory. All right, let's stop here. Let's take our next break. All right, we'll continue here. I did find out that we should be using units produced here, not production needs. So we are right to take that bottom number. So on Schedule 2, I have my note where it should be, and it is, well, that's a different problem. Here we go. It should be this number down here. Oops. At 310. That's the number we need. That would make sense. We're producing those units. That's how many we made this year. So we want to spread that overhead over units produced. All right. Our almost last, there's 2 more budget reports yet. Our next one is the cost of goods sold budget. And really, that is a mix of the others. We're just bringing the numbers in. So we've got our overhead. We got to do the selling and admin, but that's the second one. But let's go to Schedule 8. I'm going to need your help. Obviously, these are the annual numbers now. From Schedule 3, what was our annual number?
The 74,400,000.
Yep, that's it. Schedule 4, the labor.
15,500,000.
Yep, that's the one. And then our total overhead, both variable and fixed. Isn't it 13 million?
13,300,000.
right? These are all product costs here. That's what goes through cost of goods sold. Add those up. I probably could maybe do it in my head, but it's too late at night. $103,200,000. Add beginning finished goods, which is 0. Subtract ending finished goods. Gives me 99,871,000. As our cost of goods sold, which then goes where? Income statement, right, Aaron? Yep. So find your income statement, 99,871. Gross margin. Oh, cheapers. $20,129,000. And we still have to do our last schedule here, our selling and admin yet. So we'll get that in shortly here. Since we're down on this end, can we go to our cash budget quickly here? Cash budget next. Oh, we put it in already for overhead. Sorry, guys. I didn't think we did. We got to do our selling and admin next. Let's do that. The hard part is me finding it, maybe not so much you. The selling and admin, what do you think our starting units are?
It's admin expense 250 per quarter.
210.
They said that include, you're gonna subtract later at the cash budget, right?
Yeah, what do we start with?
Plant sale. Oh, plant sale.
Sales, right?
Uh-huh.
Doesn't it make sense selling and admin is based on sales? So schedule 1. Schedule 1 numbers. So I'm going to bring those schedule 1 numbers for here. They're given 65, 70, 75, 90.
These are based on units.
Yeah, units. Because the rate is per unit, it's not like a commission. It'd be another way you could do it. So somehow they figured out this rate. Now this rate is 10. Letter J is where I'm getting this. Letter J in the problem explains the variable rate, which is 10. And then the fixed amount is $250 per quarter, and that is in letter I. So again, kind of backwards, letter I. And letter I says the budgeted fixed selling is 250.
Is it included? It is already included.
1 million total for the year. And I'm going to add the variable to it. I'm glad they used $10. Save a little time. I did okay in my math, huh?
Do we have to do anything with the fact that it says it includes $50,000
Oh.
of depreciation?
Yes.
But did you do that budget?
On what report, Kayla? Does that concern us?
That's what I was asking.
It's non-cash, so it's going to be an influence on our cash budget. Yeah. So we're going to take these numbers, the 900, the 950, the 1 million, and subtract off 50. And you'll have to do that on your project as well. Just a reminder on the project, you may want to have a small input screen, a worksheet, like for the 50 and the, what was the other one? 350, that you could reference to if you want to. It's not a requirement. So let's do that. Let's go to our cash budget then. And we're starting with 900 the first quarter. And we're going to subtract off 50. Then 900, right? Is 950 the next one, Kayla? So it should be 900 then?
Yeah.
And then I think it was 1 million, so it's now 950. And 960?
1,100.
Cheapers. Not that far off.
Yeah. 1,150,000.
Oh, that was it. Okay, thank you. I hope I have the right numbers. So in total, what do I have then? Oh. Why did I put the total here, guys? It's 3,800 though?
Yeah.
I'm not consistent, am I? Can you remove the zeros, guys? Right? Here I'm telling you to keep your numbers aligned, and I'm not doing a very good job. Does that make sense? Are you going to be consistent here? We're basically almost done with that cash budget. There is dividends and there's equipment purchases. Letter L, guys. something wrong?
No. Quarterly dividend.
How much is our dividends paid?
The
300,000?
300,000, yeah.
They say this amount, then they say this amount, then the negotiation includes office of tax credit.
And then there's one equipment purchase at 2 million. And that, I think, other than the subtotals, it's all done. We did it. Good job. That's a lot of work. That look good?
What letter is that from? Oh, L.
Equipment, letter L, as the equipment purchases. Let's put our 4 million in our income statement for selling and admin expenses as well. Actually, what I'll do after the discussion is I'll finish the cash budget here. We can look at it next week if we wish to. But it'll be finished in your notes for today, is basically what I want to mention. The income statement, 4 million comes in from Schedule 6. $16,129,000 is our income statement budget. It'd be nice to work in that kind of cash flow. I never was able to. So anyway, the good old days. I think we went over every schedule you're going to have on your 50-point problem. We do have a balance sheet, but you are not required to do a balance sheet for your project. So there is a balance sheet of problem 73, but there is none for your project. So that's kind of a good thing, I think. So the last schedule, the cash budget schedule, is the final one in your project. I think what I want to do is go to the project then. Could I have you turn to problem 66, page 509? I'm going to jump there through C now. I'll give you some check figures, some hints for the problem. 66, yeah. Problem 66. Guys, I do apologize. I don't normally sit down, but I have to. Is everybody at page 509? This problem, like I said, is very similar to problem 73. We have our sale numbers given. Remember, we're only going to do a sales budget for 3 months, okay? You will need the extra months to complete Schedule 2 and Schedule 3. Like we did with that one problem, we went to the first quarter of the next year. We got to do the same thing here. So you will need those numbers for Schedules 2 and 3. As you can see here, I guess I don't need my chair. It's not working for me. Letter A talks about finished goods, okay? It also talks about how much is required for ending inventory. Go on to B is the Schedule 3 information. Now, unlike our problem, this is annoying, is it not? Unlike our problem where we only had one material, this problem has two. So you have a choice now how you want to set it up in Excel. I'm going to show you how C now does it. Each month has two material types, metal and components. And then February, metal components, March, metal and components, and then the total. If you so choose, you may put metal together, and then right below it, put components. So it's up to you. If you want to do it the way Cengage is, that's fine. To me, I would put one in and then do the other below it, but that's up to you. Whatever you think is easier. The desired inventory levels for that schedule are here, 50%. Okay. The next item is labor, and then we get to our overhead. More information, it's more detailed, right? We have to add up our variable. We have to add up our fixed. So it's not one number, it's you just add them up to get it. So the overhead is first, the selling and admin is second. For whatever reason, letter F contains the selling price. I get a question once in a while, where's the selling price? Well, it's way down here in letter F, $205. So your numbers are going to be rather big again, like we had with our problem. Letter G then is the cash discussion. It says that we have a beginning cash balance of $400,000. Now, one thing I do need to correct. This is on page 510. Can you turn to page 510? Cross out the word quarter. Cross out the word quarter in that paragraph on page 510. It's not paid in the end of the quarter, it's paid in the next month. Replace quarter with the next month is when it's repaid. And the interest rate is correct. You are going to borrow in January, repay it in February, in my mind, that's 2 months. But Cengage says it's only 1 month of interest. One month of interest. So please make that note. That is an error. I'm going to capture this so that it's in our notes for today's class. So we have that information. And I'm going to clear the ink here. Is everybody good with this? I'm going to clear the ink here. I'm going to run down to the cash budget report. It almost shows you that it's only a 1 month deal. So here we're going to borrow in January, repay it in February with the interest for 1 month. So the boxes are laid out that way. But for whatever reason, the paragraph is in error. And the reason we're borrowing it is that we have to maintain a $50,000 cash balance. So in this particular case, in January, they don't make it. They have to borrow it. And they have the cash balance. It's going to be greater than 50 once you get beyond January. Any questions on that? Now, you're going to start with 400,000, right? I'm going to end with 50. I've already told you that for January, which then becomes the February beginning. Sometimes I get that question. Well, what is the beginning for February? Well, it's the ending of January. And the ending of February becomes the beginning of March, right? And the beginning for the total is what number?
It's gonna be go that way.
The 400, right? Because that's the beginning of the quarter. That makes sense? The beginning of January is also the beginning of the quarter. And if you do your cash flow right, the end of March should equal what? The end of the quarter. The cash balance numbers, if they tie out, you're in pretty good shape. If they don't match, then there's something wrong in that total column there. I did promise a check figure. In addition, you and your partners will have 6 total, right? So you can discuss this with your partner, obviously. There's one more check figure I want to give you. It's schedule 7 here. On schedule 7, which is where we compute our unit cost, that should be 166.06, which is also, again, by chance, the same cost per unit for the beginning units, 166.6 in letter A. So letter A tells you the beginning finished goods inventory is 32,000, while that beginning cost per unit is 166.06 as well. You will end up with that same number using the budget report schedules 3, 4, and 5, just like we did today. I don't know, this is a hard chapter to present. Do you have any questions at this point? You have everything you need to do these budgets. We've gone through them all. And what I was going to do now is basically stop my recording. You certainly can, if you wish to, start on your project tonight, at least the Excel files. If you're tired and exhausted, I totally get it. You can go home. And just let me know how you're doing, if you have any questions as you're going through it. What does that mean for next week then? Next week, I want to do a pre-test of some of the questions you'll see on the test. These budget reports are cool, but they don't prepare you, I don't think, very well for the exam. So I'm going to give you a half a dozen exam-type questions. The numbers are different. But what you'll see on the test. In addition, there's a whole section on flexible budgets, static budgets, before and after the fact budgets. So there's more budgets to deal with other than these 9 or 10 or whatever. So we'll talk about that too next week, as well as allow you time to do the project. There is no exam next week, no exam requirement due next week. It's the following week that Chapter 9 is due. So you get a break from the exam cycle here for 1 week anyway. Good. I need to speak to Melissa, and I need to speak to Jill and Kayla, because they have an extra requirement that I want to see if they can tackle. So I'm going to stop my recording. The rest of you,